Hey, everybody, welcome to another episode of the System2 podcast. Today, I have the pleasure of having my friend Chris Petrescu on. Chris has had a number of different roles, but currently he's the founder and CEO of CP Capital, which provides data strategy as a service to the financial world. They work with data buyers at financial firms and corporates to build scalable processes and frameworks to enable them to leverage data as a competitive edge. Chris, it's great to have you on, man.
Thanks for having me, Matej. I know we've been playing shoot the schedule, so good to connect.
For sure, for sure. Why don't you start off by just telling us your story? Who is Chris?
Yeah, no, I think I've had more of a unique story than some others. So typically when you get into the hedge fund field, you come from investment banking background, you've done those 90, 100-hour work weeks. Not that I didn't do those at a bank, I did those elsewhere. But I started my career in corporate finance. My first job out of college was at PepsiCo, where I was deeply on I was a financial analyst working on their systems that reported to Wall Street. So not alternative data in the sense that we think of today, but still very data heavy workload, learning about back-end systems integration, and then of course the P&L drivers of Pepsi, which was really interesting because that was kind of launched my passion for the markets, which I think is lost on some data strategists today. We can get into that later. But I was at PepsiCo for about 4 or 5 years. I took another corporate job just to get myself into New York City. I was very excited about that, moving into the city, getting an apartment. And then through mutual friends, long story, but I was introduced to Matt Ober, and Matt got me a look at a role at WorldQuant. And that was my first hedge fund job, data strategy. That was like 2014, 15, 16, when it was still very cloak and dagger. We were, data. There weren't these massive conferences to find these data sets. There was no chat GPT to ask questions. It was very much just your network, who you knew, how you can travel, how you can meet people, and the research you could do. So that was WorldQuant. That was my first role.
Question on that. I think it's really interesting to your point about how finance has a very stereotypical career path. And you came in from Pepsi, and you said you got introduced to Matt, and that's how you got a look and opportunity to interview at WorldCon. Tell us more about that, and especially people that are earlier on in their careers and they're looking to transition to a different industry. What does that actually mean? How did you get in front of Matt? How did you then end up getting that look for the job?
It's a great question. So even before I met Matt, I would take vacation days from Pepsi to go to investment banking conferences. I had a friend at Needham Brothers. I had a friend at a couple other banks, and they would get me in. Guess what the company name they would put under? CP Capital. So I would go to these events. I would meet CEOs of emerging companies. Like I met the CEO of Axon. They used to be called Taser. They make tasers and body cameras for every police department in almost in the world, definitely in the US. So I would get to shake hands with people like this, and it really got me into the world of data and finance and investing. And then when I met Matt, this is way before he even hired me. He said, "Look, come with me. Come to conferences, come to events." I would go to these events. I wouldn't speak much because I didn't really know what I was talking about. But I would go, I would take vacation days off from my regular job to learn and Matt was living with my, I think, high school friends at the time. Really small world like situation how I met him. Then so that was, I mean, 2, 3 years later after we met, he was building his team and got the look. And of course, he opened the door. I would say I kicked it down, but he definitely gave me a look that I probably wouldn't have gotten. You can apply to these firms until you're blue in the face. I was coming from Pepsi. I worked at Clear Channel. I had no financial Wall Street background. I'd never been on the floor of the exchange, nothing like that. And everybody else has come from Bloomberg. A lot of people have come from Bloomberg in some way, shape, or form, or Bloomberg or Goldman or something like that. And I had a non-traditional path to get there.
That you were taking vacation days to do this. You, I mean, there's a lot of hustle in that, right? To be able to, first of all, like know what you want, which is kind of hard, especially for a young person, and then to proactively go in your spare time and meet these kinds of people. Tell me a little bit more about what made you decide to go into finance in the first place. I mean, there's clearly a lot of passion that you demonstrated by going above and beyond to do this. But what was it that attracted you to it?
Just love financial markets. I love everything about it ever since I was little. My dad has investment accounts. We always used to talk stocks. My boss at Pepsi, half the time towards my end of my career there, we would just talk about trading. And then it was, okay, how can you get angles on these companies? What drives these companies? And then when Matt kind of told me about the idea of data and buying data for hedge funds and this whole concept of alternative data, I just couldn't get enough of it. It's a real passion of mine. And when I was my corporate jobs, it was good. Was I like waking up dying to report PepsiCo's bottling numbers to the street? No, but it was an interesting way to get exposure to the world. What I do today is really, I have a true passion for it, and I think I've carved out a bit of a niche. And what I would say is I have a lot of discussions with people, to your point. They want to get into the field. There's so much content now. And these people, they pick my brain, and I never hear back from them because I think it's overwhelming. You have to, I mean, there's 4 or 5 newsletters. You guys have a great one. Read these newsletters, talk to these people, go to events, go to conferences, meet people, find an event you want to go to, take a vacation day and go for it. And I think people kind of just retract to what they know. And you have to push the limits. I mean, I remember the first few months on the job, Matt said, you're not going to understand anything that is going on. Basically, just keep your head down and learn. And I did this when I trained my first analyst. You're not going to understand anything, and then you're going to wake up one day and you're just going to start to get like the lexicon of things. And you'll either love this or you'll hate it. There will be two outcomes. You're not going to have a career in this and be mediocre. Like it's going to be, you're going to be good or you're going to go back to something else.
Yeah,
That's advice I have for others.
I think it's great advice. And it also, from an employer standpoint, it demonstrates that they have a passion for this, right? They have an interest in doing this, whether you're paying them or not. They're already spending their free time on this problem. And that's how they found their way to you, which goes a long way to showing that, yeah, this is someone who really, really cares to be there. But maybe tell us a little bit more about World Quant, and for those who don't know, to talk a little bit about the fund itself. And it was also a really interesting time to be working in alternative data. To your point, it was the very early days of that. So paint us that picture.
Yeah, I mean, and it's still, of course, an interesting time to be working in it. I've got a company that has been built around basically what I learned there. But WorldQuant is a systematic fund under Millennium. I mean, they've kind of branched out beyond there now, but they're basically under Millennium now. And data is the blood of any quant shop, whether it's WorldQuant or others. And a big part of our role was to find data that was interesting for research and trading. There was, data that people knew about from big companies like Bloomberg and FactSet and S&P and Refinitiv, Reuters, and those shops. And then there were companies who essentially didn't know that they were data companies. I'm not going to steal Igor's quote. I think he said it first, maybe, but Igor is the CEO of WorldQuant. He said, every company is a data company, something like that, paraphrasing. And he was right. Any company has data. We called it exhaust data at the time, where they might not have been born to sell to hedge funds, but they have data that could be interesting for hedge funds. So we spent a lot of time there calling, almost cold calling companies. And when they would say, what is a hedge fund? Kind of knew that we had something because we were the first to reach them, right? This was before, the Sensor Towers and Aptopias of the world even knew what a stock ticker was. So we were given a pretty broad mandate and a pretty loose leash to travel the world, go to events, meet people, and test, bring in data for testing. We had a big research team there, and we would get to trial a lot of things. And sometimes it was throwing something at the wall, but you never know what sticks. When we were so early on, these were before these categories of data they didn't exist. There was no ESG, there was no satellite. Like we were, I would say, defining these things in a way. And of course, it was us and Cubist and, a dozen other firms that I would say really took off at the same time. But it was quite a time to be there when this was before, we were barely even allowed to speak on panels or podcasts or anything like that. Sometimes you wouldn't even wear a name tag when you went to an event. It was wild.
Back then. And interesting point. Like, talk about that evolution, how that's changed. And you had another stop right between World Quant and CP Capital. So maybe like we talk a little bit about that and how the alternative data world is continuing to evolve.
Yeah, I would say, well, we'll get the easy part done first. The stop between um, my own firm and WorldQuant was Exodus Point. So I was there for a year and change during their launch, which was it was an experience. I was there for a year and change. We built their data assets from the ground up. Whereas with WorldQuant, it was like fuel into the engine or coal into the furnace. Exodus Point was like building the engine. So we were very early on there, and those that I had a very great experience outside of quant. We were building quant there. Worked with a lot of fundamental guys. There was a credit and macro piece as well. So I would say I rounded out my skill set there to take like a positive experience from it. That was a year and change. And then I launched my own firm, really right into the teeth of COVID. Like January of 2020, I said, let's give this a shot. Nobody's hiring anyway. See what happens, and the rest is history. We can chat about that, but I would say what changed since the beginning to now is like the democratization of the actual data sets. So there's a lot more content and a lot more ways to discover things. And I think it's more drinking from a fire hose now than it's ever been because there's Battlefin, New Data, Eagle Alpha, Quant Strats that's now called something else. There's a dozen events that are worth going to. They all have a big overlap, but there's nuances in each of these events. I would argue you should attend as many as you can, but just the list is still a small piece of the way.
Maybe you could pause a little bit on the event piece of it. How do you think about it? Exactly, you're saying there are a lot of events. There's for someone that's just getting started, it might be overwhelming to try to figure out how to make sense of it all. How do you think about differences between different types of events? And I'm sure, like, depending on what each person is looking for, a different event might be more appropriate. But how do you think about that strategy of like your event attendance strategy for someone who can't just go to all of them?
Well, look, I'm on the board of Battlefin, so of course I'm partial to them. So I'm going to give them the shout out and say, if you have to pick one, that's the one. But I think there's three different tracks of events. There's the broker conferences, which are highly specialized and you really need relationships. You can't just kind of walk into those. Battlefin, New Data, Eagle Alpha call that like the trifecta of alternative data events. They've all got opportunities for hedge funds to meet data vendors. There's people who are speaking on stage. Um, Go to the one that you're able to get into, right? And then there's more niche like data science, AI, or more general conferences. I've kind of avoided I've never been to Vegas for Money 2020, but I think those when there's 20, 30,000 people who are going, it might sound like you're going to get a better return, but I'd rather go to a smaller event. I'd rather go where 300 people are people I want to meet instead of 20,000 people where you won't meet anyone, right? You're just going to be running around these kind of smaller events, and that's where they top at 3, 4, 500 people at these events is like I've seen that as a critical mass time and time again. It's like very concentrated crowd, but these are people who are like they have a reason for being there. They're not just a salesperson who traveled for fun. They're like they want to be there. So that's what I would say about the event. And then look, there's a lot of podcasts and companies like S&P have there's a ton of free education. I mean, there's no excuse. Like I was saying earlier, there's an enormous amount of content to just immerse yourself in, but you have to sit in front of the computer and watch, right? People have said to me, I've been on podcasts 5 years ago. Yeah, I heard something you said on something podcast. I heard you do this data thing. Let's chat. I swear, you get returns on these things essentially forever.
Yeah, the internet's forever. Be careful what you say because people will be coming back 5 years later.
Yeah, well, this is all going to be recorded and hopefully posted. So
For sure. Now, okay, talk to me about the path to entrepreneurship. Well, you worked at Pepsi, you worked at very large companies, you moved over into finance, saw different sides of finance, and then you go off on your own. What was that like? Was some part of you a little bit nervous, scared about taking the leap, or had you been dying to do it for a long time and you couldn't wait to get started?
You know, I had I never thought of myself as entrepreneurial until I was essentially forced to be, right? So, um, a lot of these environments, whether you're at Pepsi or Exodus or anywhere, they're extremely political. And I'm not saying this in a bad way. I'm not disparaging anybody, but there's a lot of politics and bureaucracies wherever you work. And that was part of why I started to branch out on my own. Said, I've always had the CP capital. People would call me CP. I would get into these investment conferences as CP capital. So it was like almost a little rebellious thing. Like, you know what? Screw this. I'm going to go out, see what I can do on my own. And then COVID really forced my hand there. I wasn't excited to go back into another fund. And once I got a couple of anchor clients and realized that the consulting way was just packaging what I did, exactly what I did, as a gun for hire for the other 400, 500 firms who buy data that aren't that tier one who have a massive team. There's a lot of opportunity there. Was it scary? I guess there was a time when I had like I think it was like $1,300 in my bank account, something like that, when you're just building and growing, and you're getting that first couple clients and you're figuring out what you want to do. And I did have a big pivot in the beginning. I thought I was going to do a lot more of these like vendor relationship referrals, which we still do, but the bulk of the business is working like as a data strategist for hedge funds who just don't have that person. And that could be a $500 million quant startup, or it could be a 3, 4, $5 billion fund who's spending 10, 12 million in data and just like needed someone to right the ship. So we have clients who are on both of those gambits. But I'd say like one thing I would say is like I'll never go back. Right. I love my clients. Would I work at any like internally at any of these companies? It's a different game. What I like about your own firm is you have much more defined parameters. There's things that you advise on and things that you avoid. You have your homework assignments, you have your data assignments, and that's it. That's it. There's no, you know, weekly meeting with people that you don't know. Everything has a purpose.
Yeah, like in some cases, entrepreneurs are forced to be entrepreneurs, and it's interesting to see. Even in my case, I would imagine a lot of other folks as well, where there's definitely a pull that's pulling you towards the idea, but there's also push, and the push is sometimes like something your boss said or something that somebody said at one point. You're like, I'm gonna prove that person wrong. I know I can do more. And then you embark on this journey. I was just listening to a podcast about the guy who started Dick's Sporting Goods, and he was like a kid who was working in a bait and tackle store, and he came to his boss with a list of ideas of like products and things. He was like a huge fisherman even as a kid, and his boss basically laughed at him, like scratched off all the items on the list and told him why each one of them was a bad idea. And then he famously just takes that list home to his grandma, and his grandma asks him, "What would it take for you to open up a store?" And he's like, "Well, take the money." She just goes to the cookie jar, pulls out $300, gives it to him, and now it's like a $16 billion company. And I feel like there's a moment like that in a lot of entrepreneurs' lives where it's like something that was said, something that's like, hey, you know what, I should probably go off on my own and do this. And then you do, but then it's like the dark side, right? Which is like you get your bank account is at $1,300, and you're like, shit, what do I do now? What were you thinking then? Like, how is this? Yeah, and I've gone through that kind of stuff too. And you're just looking at it, you're like, did I make a mistake? What am I doing? How can I get back from this? What'd you do?
I just doubled down. I mean, look, I wouldn't have starved, right? I never asked my parents for a dime for this, but not, like I would have had a backstop. I wouldn't have been out on the street. So like maybe I didn't have enough pressure. But what I would say is that my personality a lot of the time is a little bit rebellious. That's where I got into some hot water at the last fund. And I did need to prove myself in many ways to my family, to colleagues in the industry, to my friends who are saying, you sure? How's this thing going? I said, it's going very well. You get that first two clients, get two more clients, you get two more clients after that. That 1,300 was the bottom. I mean, that was the bottom of it, and just prove yourself. And it sounds cliche, but I just didn't stop. You first off, I had no choice, right? During that time, you're locked in your apartment, you can't eat out, you can't do anything, but people are accessible. I would say COVID helped in a lot of ways. I mean, when else could you have 16 Zoom calls, 30-minute Zoom calls back to back to back to back just to build your business? I mean, speaking to 50, 60 people a week. So that's 400 people a month and or 300 people a month, and you do that for 3 months. You've spoken to 1,000 people and you get those key clients, you get those key relationships. Then you can start to get a little breathing room. You don't have to say yes to everybody. You can have a little bit more of a vision and be more strategic instead of just like constantly executing. But it's not for everyone. When I've tried to build, I'm still trying to build this business. And when I speak to people, when I try to hire them, I say, look, it's going to be what you kill. You know what you're making at your fund. You know your raise is going to be X percent. They're going to screw you on your bonus. You can come here and it'll be under my shingle. Sky's the limit. And people don't want it. They need stability. And I was lucky enough that I had enough runway. I mean, the plane was running out of runway, right? But I had just enough runway to take off. And now we are definitely cruising.
Talk a little bit more about getting that first client. Going from 0 to 1 is often hard. I'm curious what your experience was. Who were these first clients? Did you know them from before? Did you get introduced to them? And then I also want to know, be able to set up, 400 meetings a month, right? I totally agree, right? It's a law of large numbers. You got to talk to a lot of people, but it's not trivial to figure out a way to set up that like 1,000 meetings in a couple of months. So how did you go from 0 to 1? And then how did you then, start talking to thousands of people at a time?
I think, well, my network that I'd built over 4 or 5 years across two massive companies. LinkedIn was super helpful. You're just kind of like anybody who came into my feed. I had people who I said, yes, I should talk to this guy and that guy. And then I had this person, I totally forgot about them. Let me send them a note and get some time. And I think I was able to get on people's calendars because of these relationships that had built up. So I think the network is huge. And this was not just people I had met at events. This was people I met at events and spoken to a bunch of times. Maybe we had collaborated on something. Maybe they were a vendor that I purchased a lot of data from and I was trying to call in a favor just to speak to somebody. So that's how I was able to get that many meetings. And then also, like I love the in person, I love the coffees and everything, but when you're trying to get you can't do 16 coffees. Say it's 16 waters. It's not about what you're consuming. It's about think about going from 3 blocks in New York City. You got to get somewhere, you got to find a new coffee shop and sit. So we didn't have to do any of that. It was just like boom, 30 minutes, boom. So that was how I built that up. And then I just got such a momentum from that. And then the first client, I think we joke I should have named the company like Millennium Spinouts, right? Like so much of my business has been from prior PMs at World Quantum Millennium who, and when you're at these firms under like a multi-strat or a big fund, you're afforded lots of these luxuries of data. Come in, they have the menu for you, you're paying a fraction of the price of buying it on your own, and then you go out and try to launch a venture by yourself, and this data is not $10,000 a year, it's $100,000 a year. And your budget isn't 150,000, it's 3 million. And you need it's like your deer in headlights and you need someone to manage that. So that was my first client was a PM who I didn't even know very well while I was at World Quant, but we've kind of crossed paths while we were there. And that's where we've built a lot of our businesses from people who've spun out of there and people who I'd never thought in a million years I would talk to again after I left there are like my biggest clients. And it's wild. Not that you need to be, it's better to have more friends than enemies, and you should not like you're kissing everyone's ass and not burning bridges, but I would say it's a small world. It's a very, very small world, especially in our community of data strategy and data for hedge funds. It's very niche. There's not 1,000 of us. There's just not that many people. So you never know when you'll be like who your next client will come from. But that's how I got the first one. I think I have to remember how I even connected with them. Maybe it was through a bank or something. But yeah, the first one is definitely the hardest. I remember exactly where I was in my apartment when like I signed, we did it for 3 months and I said, let's try it for 3 months and see what happens. And then let's extend you for a year. I mean, I was over the moon. I remember it was like 7 o'clock in the morning and the guy called me. And then I kind of to your point, like, how do you know that it's working? I can make it work with this one, and I learned along the way. There's things that we did with that one that we don't do it with new ones now. But, yeah, that's how you get started.
There's nothing quite like that first, that the first hunt when you go in and you bring somebody, the new client. There's something, even though, like, objectively speaking, I remember even for me too, like I was making like so orders of magnitude less money than when I had a day job. And that first, like, I used to get like speaking engagements I made where like 5 grand was the first external money that I made to come in and talk to a fund about all this alternative data. And it felt so good. It's like, holy shit, I'm making like 5 grand to do this. And yeah, like it feels a little bit, I don't know, somehow better when you went out there and you harvested this thing yourself instead of you're just showing up in your paycheck.
Yeah, I mean, every dollar is yours. Like, you've got how many people working for you now? 40,
Yeah, 40,
something like
yeah.
that? It's an amazing achievement, and you started the same way at 1. And it's good to you become a little bit of a, like, you create your own gravity, right? And you have to start somewhere, and then once you start, people, "Oh, yeah, Chris is actually successful at what he's doing. He's got clients, he's got more than 1 client, he's hiring people." One of my analysts just got hired by one of our other clients, which I think was, like, a pretty cool achievement. Some people didn't know how to interpret it. I thought it was, like, amazing that was like a feather in my cap, if you will, that my top analyst, like, the fund that he supported actually wanted to hire him. And I groomed this kid from college. So it was like a cool achievement for me. But you start from zero, started from the bottom, now we're here type of thing. And I think, like I said, it's not for everyone, but you're gonna, same way I say about a lot of things, you're gonna love it or you'll hate it. And there's people who start this and they say, you know what, I've got a mortgage, I've got kids, I've got 2 cars. I need that stability. I need that paycheck. I need that health insurance and 401k match, and I need the backstop. And then there's other ones like, to your point, I'm making, orders of magnitude less than when I was I'm making orders of magnitude more now than when I was at a single fund, and the upside is like what you want to make of it. It's not, well, did I hit my performance metrics and maybe I'll get my 3% inflationary increase. Like, that's just not the game we play.
That's so true. Okay, talk to me about what you guys are doing at CP Capital. I'd love to get into, I don't know, some examples or case studies or things that they can share with us, give us a better sense of what you're doing.
Yeah. So when we say data strategy, it gets commingled a lot with market data or procurement. So there is an element of it that is just checking some boxes. When somebody needs to go to the grocery store, you need apples and oranges. You don't care what flavor they are, if they're Honey Crisps or not. You just go out and you acquire those. There's a price for that. Like market data, for example, there's less thought that goes into purchasing certain things, which we do that as well. But I would say our core, we work with firms in 2 or 3 ways. The first one is very specialized, where they're just looking for a certain piece of data, and we're shortlisting 3 or 4 companies who can provide that. We're negotiating some terms, we're getting the data in the door, and then once it's in the door, we don't see it again. Sometimes we don't manage the renewal if it's after a year. They're just like, get the data in the door, and that's it. And then we have other ones where we're much more integrated into their firm, where we're in Slack channels and Teams chats with all of their traders who are asking us all sorts of questions. And we have Confluence page project log of 30 things we're working on at once. We're managing all of their renewals. We're managing when data breaks. We're working with engineers for that, like what I call data strategy liaison. The only thing that I don't do is what you guys excel at, is the data science part. I partner with the scientists, getting them what they need, but the actual coding and back testing is the one thing that we don't do, and we're preferring not even going to try to compete in that space. So when you hear data strategist or head of data strategy, we are just that for other firms. And a lot of these hedge funds, the biggest pushback I'll get is, well, we want to hire full time. It's great. I will feel like full time. We will feel very full time to you, for a fraction of the cost. And let's do it for 3 months and see what happens. We do a lot of these 3-month, 6-month deals that have turned into multi-year clients. I mean, the only two clients we've lost were ones where they were shutting down the strategy that we were supporting. So, um, you know, another feather there. Yeah.
It's a great record. And so in terms of getting new data, negotiating contracts, a lot has changed over the years, including like the sophistication of the data providers. To your point, back in the day, they didn't even know what a stock ticker was, let alone compliance. And now it seems like people are poaching lawyers from Schulte to be their in-house legal counsel. How have you seen that part of the job change, as well as the, I guess, like the other side of it too, just even sourcing these, to the point you made earlier, is there's just a lot of information out there. People know that hedge funds are buyers of data. How has all this, from the compliance, the sourcing side, how's that changed the strategy piece of your
Well, compliance is something that it's a necessary stage gate now. So you need to, it's part of the discussion every time. How did you source the data? In the beginning, honestly, there were no compliance officers. You get a trial contract signed. If you signed our boilerplate agreement, we'll bring in the data, and there just wasn't this framework. And it just ballooned over the last 3, 4, 5, 6 years, I think in a good way. It's brought some like religion to that side of the business. But for us, I personally, maybe I do more than some others, but when before we get contracts in, I'm always almost lightly redlining it myself. I'm not a lawyer, but I've seen, gosh, like thousands of these agreements. So you know the 10 things that a typical lawyer would care about, you know the 4 business terms that you're negotiating on. So we really partner more with legal and compliance teams than I think most people do. Instead of just, here's the contract, throw it over the wall. We do that first pass, and I think it's very good because it allows you to understand. I talked about this on a couple of years ago now, that AI clauses were just starting to seep their way into contracts. And there were vendors who were saying, you can't use AI at all. There were vendors who were telling you that they used AI. There were other vendors that like asked you how they used it. So I think it gives you a leg up, and just seeing the clauses that are in these agreements to where the thing was going, like MNPI, like, and personally identifiable information. That's like always in there now. 10 years ago, PII, people were like, "What's PII? Is it a name? Is it an address? Do I care? Can you remove it?" So I think looking deeply at these contracts allows you to get a little edge on like what's the next trend. So yeah.
And what about on the sourcing side? Like how is that played out? Is it harder, easier now to find things than it was before?
I think it's harder to be more unique. So certain times, like you don't always have to get fancy, right? Sometimes if you're asking for insider transactions, there's 2 or 3 firms that do it, period. You don't have to find the newest AI insider transaction data set. But for other things, you could get more specialized. And what I like to do with AI, with ChatGPT, is I'll ask it things that I know the answer to. So if I'm asking a question about data, I'm trying to get it to respond with companies that I know, and then I'll ask it to expand. That's been like something that we've done pretty well. That has opened a couple of doors, which I've been surprised, pleasantly surprised. So then the question is like, if there's AI, like, okay, great. You have the data sources. You still have to contact these people. You still have to understand what they do. You still have to get them through a compliance framework. Pricing is still a little bit of a black box, especially once you get out of these big 4 or 5 vendors.
And
But I
do
think
do
there's
you guys
definitely a nuance to that.
do you guys help on the pricing side as well? Because I imagine, yeah, you have just good knowledge of what things should cost across the universe. So do you help your clients with that?
Oh, absolutely. Yeah, I mean, that's what people will say. I'm not the one who's coming in and slashing 30% off of every contract you have. What I will tell you is upon renewal and where I can, we'll get better pricing for you. I'm not going to, if it's 50,000 and they come back at 40, we'll end at 45 many times. I hate splitting the difference, but a lot of times negotiation is going to be like that. And the bigger ones is when you're saving 100, $200,000 on a larger deal, where that will make up for sweating a vendor over a 2% cost increase. I just saved you 100,000 with this one. That pays for all of your cost increases for the next year. So if you think about it like that, we definitely do help on price. And what I say is you'll get, if you want it fast, you might sacrifice price. So sometimes, what is it, fast, good, or cheap, something like that. You have to pick two. So if you want it fast, you will sacrifice negotiating power. If you're willing to wait till Christmas time, wait till the end of the quarter, play that, cat and mouse game, you'll get some better pricing for sure. But we've done that. I mean, my first negotiation that I did at WorldQuant is far different than the negotiations I do now. I mean, you're still learning. I'm always learning.
Trends are you seeing in terms of the types of data that people are interested in these days? Is it still just the, transaction data sets, clickstream, or are you seeing more demand for the niche products?
There's always going to be, I think that is becoming more mainstream. There's always the debate, like, do you want to become an alternative data? Most of the firms, like, you want to sell it to everybody. You want to become non-alternative. That's almost the goal. But I think there's definitely more data sets in the private company space, or like consumer health is something that I've seen a handful of times where, well, what's the health of a consumer? Well, not sure. How can you measure that? Well, how would you measure if you're a healthy consumer? You're going to look at your credit card bill. Am I behind on my auto payments? And there's data sets that are tracking this type of stuff now. So that's where it could be interesting if people are behind on certain payments. Auto loans, for example, has been a big one that I think auto loan delinquencies are at some ridiculous high. They're saying, okay, well, what happens when that breaks? Will that break? And then which companies will it impact? Does Ford care, or do the companies that carry the Ford financing loans care? And then you go down this rabbit hole of how can I look at that? Maybe I need to look at insurance companies. So that there's lots of different angles that you can take to find data. And those are the really interesting ones when you find something that's like a little bit more creative than just, I want transaction data in Spain. Okay, there's three firms who have European transaction data. Here's the two that have a Spain panel greater than 2 years. Great. Ship that off. That's an easy one. But when you're getting more like that second derivative of, this data is inherently not tagged to companies, but it can impact companies, I think that's an area that we focus on a lot.
Do you get a lot of these? I mean, how do your questions break down? Is it mostly people that know what they want to the point of I need transaction data in Spain, or do you get a lot more open-ended questions? And how does that change over time, over the relationship with that client?
I would say it's pretty random. So we have clients who they're just getting their like market data stood up. So they need real-time pricing in 14 exchanges, and that is a ton of paperwork. It is not sexy by any means, but it's necessary. It's like the foundation for all this other data. And then there's the other ones where they either know they want a very specific data set, or hey, I used this at my prior fund. Do we have it here? I want it here. And I'll opine and I'll say, look, yeah, you might have had that. We have this. It's actually a little bit better, or maybe it's not as great, but it's cheaper. And often we can find some equilibrium. And then there's the really niche ones, I would say, with the fundamental firms that we support, where they're asking for a very specific piece of information. And I'm not even told why they want this, because that's proprietary. They're saying they're just giving me, they want the fuel. They have an engine, they have an investment thesis that sometimes I don't even know about, so I'm just like filling in a piece, like a blind spot in their puzzle. Those are really only for the fundamental ones. The quant ones are more, I'm not saying they're basic, but there's a lot of standing up 20 or 30 data sets that you need. And then you'll get driven into like, okay, do I want to focus on news and social media? Do I want to focus on hedge fund flows? There's a lot more, like once you get past those 20 or 30, there's more branches. But fundamental, it's just, hey, we're studying these stocks. We need this information. And there's the greatest ones where I have no idea. And I say, look, I will learn with you. I learned fast. We're going to learn this one together.
That's so interesting too. Like, given the difference between the quant shops and the fundamental ones, and we work exclusively with fundamental investors. Like for the quants, is a big part of the value proposition you provide that they just have a ton of like they know what they want. Like I just need like 20, 30 of these things. Just go talk to everybody, get all this stuff like wrangled, get all the paperwork done, just get me this data. Is that a big part of it versus with the fundamental folks, it's more of just I don't know what's out there, sort of looking for something like this. Help me find it.
Yeah, I think with quant, there's a little bit more nuance in that. Is the like I grew up at World Quant, so like that comes even more naturally to me. But even there's nuance. Hey, we're looking at fundamental data sets. Which ones are point in time? The data set that you had at your prior fund might not exist anymore. It might be out of your budget. It might be called something different. There might be something better. So that's like even with fundamental data, for example, like there's Bloomberg and FactSet and Reuters has two fundamental data sets. S&P has two. There's five data sets right there. So just saying you want a certain piece of data isn't the full answer. And all those vendors carry different terms. Some of them you can trial, some of them you can't. Other ones have different data sets that pair well with it. So sometimes you'll say like if I'm going to be buying something else from Bloomberg, I might essentially be forced into this piece of data. So there's that nuance of like a roadmap of data sets that you want. And then the pricing for those is pretty, there's standardization, but there's more levers to pull on the quant side on standing them up. And fundamental is just, to your point, it's completely theme driven. So whether you're into healthcare or industrials or a certain piece of the energy market, that's the focus with fundamental.
Yeah, no, I really like your point about how you have to stay up to date on these things. It's not enough to just, oh, I know who this is the data that I used to buy, but things change all the time. New companies come in, people lose access to some of their suppliers or prices and changes. It's not even just like the amount of price changing, how they sell it changes, like ticker packages, all sorts of things. And so staying on top of all that across all these data vendors is more than a full-time job. And
Well, I was my between World Quant and Exodus Point, I had 1 year non-compete. I was never busier in my life than during that non-compete because I was speaking at every event. I had no restrictions on speaking, so I could actually like people can get to know me on stage. And I was trying to stay relevant because it's easy to take a year off and then you come back and it's deer in headlights. You're gonna walk into a room with a PM and you'll mention something and they'll say, "Oh, that company got acquired." What are you, stupid? Like, where were you? Where have you been since June? Well, I've actually been at every single conference. So I know all of these things. So I think it's you have to stay on top of the pulse. And there's no excuse now. You can go to these events. There are a ton of newsletters out there that tell you what's new and interesting, but then get like speaking to these firms every 2 or 3 months. I made a sarcastic comment on LinkedIn. Somebody posted something, I think it was Ober, about fundamentals. And I said, oh, FactSet doesn't have point in time fundamentals. And like their salesperson responded to me, set up a call, learned about a new data set. So there's like, you just have to stay on top of it. And you can get, people can email me until they're blue in the face, until I'm blue in the face. When you have that 10-minute conversation, here's our new data set. Then it goes into the mind. It goes into our catalog. I have a catalog that's nowhere near for sale. I would never sell it, but it's an idea. It's like a huge database of these things that I might not look in there for 2, 3 years. We did this at WorldQuant all the time. We would drop it into our database, and 2 years later, somebody would say some keyword. We punch in that keyword, boom, we have something that like nobody even knew about 2 years ago. Now we have it. So there's definitely a lot of that. You have to stay on the pulse. And the only way to stay on the pulse is from the beginning when I was taking vacation days to go to these events. Like you just have to be I'm all in, obviously, on this thing. It's my baby, but I've been all in since I started learning about this world. I can't get enough of these types of events. Call me a data wouldn't call me a data geek, but I guess I could be a geek in some ways when it comes to like enjoying these events.
social data geek, you want to go to the events and meet everybody.
Well, deals get done at cocktails, right? So there's definitely like whether you're drinking or not, you should be in the mix. And just I think when you stand, I love being at an event and finding that person who's kind of on the perimeter, maybe doesn't know anybody, maybe is a little bit shy. Those are the best conversations. And I love seeing the people that I know, and I do tend to gravitate towards that. But it's always good to find somebody else who's like Do it next time you're at an event. Find somebody who you're like, I know that this person is struggling to meet people. They have an interesting story. They're at this event. They've got something to learn about. Maybe they're just an acquaintance, but I think I've met people that way more than staying in your circle, which is very easy. It's comfort to go to the 5 people you know at the event and, wall off the conversation. I'm always trying to open that circle to new.
Yeah, no, that's how speaking of like all these conversations with all sorts of different people, do you when you mentioned like taking notes and being able to search through those notes, like do you building or do you have a repository of these things? Are you putting them into ChatGPT or some other platform to make it easier to find these conversations? Or I'd imagine, yeah, that's one of the benefits if you're talking to all these people, if you can transcribe that information and then search it, it could be a massive asset that only you have because you're going in and actually having these conversations.
Well, I mean, the old school way is I have a handwritten notepad that I am 3 months behind at any given point of actually transcribing that into the database. So, like, the way that my mind works is by the repetition. Like, I'll take the notes, and then I'll transcribe them, and then that like, maybe by the time I get to it, it's time to follow up. So, like, I might have a conversation today, and I won't write it down until, like, November 1st, and I'll be, "Oh, we need to follow up with that vendor." So that's one way. We're trying to use AI. One of my colleagues uses it much more than I do. And we use one of those, I think we use Otter, where it just joins the discussion. But he works like the vendors I've seen are much more open to it. The hedge funds are not. So like when I'm on a call with a client, it's never in one of those things. So all the hedge funds say, we prefer not to be recorded. Makes sense. So those ones I have to actually take the notes. But for the typical let's meet vendor XYZ discussion, those are great to use. But you also have to go back and read them and like tag that. We've got a couple of different databases, so we have to tag that discussion goes into like a Salesforce or Jira ticket or something like that. And then you do have the full discussion because you can click that and that vendor will say what type of data do they have. Maybe it's one of 20 um, choices. What regions do they cover? Basically, US or outside of US, like Asia. I'll click different countries, but Europe, kind of its own thing. And then it makes it searchable. So then you can say, okay, this company talked about a consumer health in Brazil. What did I actually talk to them about a year ago? And that's either the transcription with a summary, which is pretty good. They're like really good. It even catches the sentiment of things. So when I know that the rare occasion that like I'm upset on one of these calls, it will say like Chris's demeanor was trailing off towards the end. Like they're great. I mean, I love these tools. So yeah, but that becomes a repository that we have. And that's like an amalgamation of these firms that I've met over the last 12 years. I mean, there's like you can buy these catalogs, Battlefin, Eagle Alpha, New Data. They're all great catalogs, but they're just catalogs, right? Like there's no context behind that. It's you, the catalog is like the tip of the iceberg. It's like the gateway drug into becoming a full-fledged data addict, right? Like you've got the list, but what can you do with that list? How can you speak with these 2,000 vendors? What are the 30 that you can't live without? That's where we provide that edge, and a lot of that edge is speed. So we save money, but we get to it a lot faster. Some small firms, like when we don't get a client, a lot of what I'll get is the COO does this. He does it on his own. Or the CFO does this, or some guy in operations hates it, but he does it. I'll say, well, if he hates it enough, would he pay to get it off his plate? Sometimes the answer is yes, sometimes the answer is no. But that's where we just fully outsource it. And it's not that this is rocket science, but you need extreme discipline and the experience is building for us. Every year, we're getting better at it, right? And we've been good at it for a while, but every year we're learning more. That network expands.
Around the types of clients, and some people might want to do this themselves. What is that ideal client for you? Like if they meet those criteria, it should be a no-brainer for them that they should reach out to you to use you.
Well, if they're doing it themselves already, that's not our target. So there's two people who are not our targets, but they are connections. So the ones that have big shops, Citadel, Millennium, Point 72, those shops we have friendlies, we know who buys data at those firms. They'll sometimes tell us what they're looking for. So we have another piece of the business that caters to them. We've got a catalog. We'll like loosely look for things for them, make introductions, maybe get paid for those. That's like 15% of the overall business. It's a small but growing part. The other ones who are not interested, we don't try to convince anybody that they need this. If it's like if it becomes that, well, we don't, great. Thank you for your time. Enjoy doing it on your own. We find people who are familiar with the service before, prior PMs, prior clients, or a PM. Now we've been along long enough that we've had 2 or 3 clients who we've worked that with them, and they've either shut down and reopened, or like a PM has left, or like an executive has left and went somewhere else, and we've picked them up. So we're starting to get that momentum of like people moving around between firms. Someone that should reach out to us is somebody who knows they need this. They've had it at a prior shop. Well, we had our data person at XYZ. They were great. Can you do this for us? We work a lot with startups where they are sometimes pre-funding or like right after they're funded. I think we provide the highest impact when they're right at that level, because the first 10 data sets that you buy have an immense impact, I would say, on like your data journey. If you make mistakes earlier, they hurt more. Whereas the 14th, the 25th data set you buy isn't breaking something that you bought 6 months ago. It's just like an increment. So the earlier the better. But even firms who are well, we have a client now, they're a $3 billion fund. We've been with them for 3 years. They were spending north of 10 million in data and research before we started working with them, but they had, to your point, nobody who was focused on it. We were introduced to them through a vendor who I know very closely. They said, look, these people have demonstrated a need that they want service like this. They're hiring full time. Why don't you talk to them? So those are the best conversations where they have a demonstrated need for it. We're not trying to boil the ocean and make everyone a believer, but when you're a believer and if you've had prior experience, it's more of a layup than us convincing you that this is helpful to you.
It's perfect sense. Now, if we can shift gears a little bit and talk about the data vendor side. I know you also work with some data vendors. Are there any that you want to give a shout out to? Are there any things that you're seeing that you like that you think more people should maybe reach out to you about if they want to hear?
Yeah, I mean, we work with about 70 vendors now, and that's intentional. Like we have no passion of building a 3,000 company database. These are firms where I've worked with them very closely in the past, where we've helped them. We've done some research to bring them to market. So then once we help them, like teach them about the hedge fund space and open doors, they kind of get into our small catalog. But one in particular that's been a pain point for me, and it's a pain point for everybody. And anyone who doesn't tell you, I would tell you that they're lying, unless they have some piece of software, is a company called PostSig. So I'm invested in them personally. So take that with a grain of salt. But essentially what they do is it's contract management, hence the name post signature. So this entire discussion we've had today has been the obsession of getting things to the point of signing. And once it gets signed, it gets thrown into some database and you worry about it come renewal time. Sometimes you might miss those renewal dates. I've missed a handful of renewals in my career, and each of them are horrible. You bat 1,000 and you miss one renewal, and then it's like, oh my God, how can we fix this? How can we prevent this? A system like this uses AI. You drop the contracts into the system. It pulls out all the key terms. It pulls out the usage rights. It pulls out all the key dates. And then you have a database that allows you to really maintain your contracts. So you can say, not what's coming up for cancellation the next 3 months. I need to cancel $1 million of data. Is that possible? Then you go to your management and say, yes, these 3 contracts are coming up before the end of the year. We can get rid of them. Or what's our exposure if everything goes up 10%, so we can budget for it. And it takes a lot of the guesswork out of it. And that's part of it's like a little bit of a consortium that we have now. So when we get new clients and existing clients, we have, I think, 4 clients who are using PostSig now, and the rest of them either have something or they're trying to roll them out. When we come into a client, we do the sourcing. PostSig handles the the contract renewal management. If you want us to do that, that's like our preferred provider in that space. We're not doing it on the spreadsheet. It it exposes us too much. So either you're going to invest a little bit more and get like the post sig add-on, or like we're not handling renewals. That's like what we do with new clients. But I think those are the more interesting ones for me. There's vendors that we love. The social media vendors, context analytics, the old social market analytics. I mean, we've got our favorite in each category, but I think the software side of it is more, we're focusing on it more. I've been invested in them before they're like first round. Call me an angel, I guess. Small angel, but an angel in there. So we've had a real hand in their rollout, which is I've invested in firms before, but I've never been this close. And it's been like a really great experience. It's like it is tangential to work, but it's outside of CP. Just seeing these guys grow on their own has been really cool.
I think that sounds super useful as we have tons of contracts that we manage, and we should definitely talk more about that. I'm curious, I guess just one quick question. Like, does that stuff run locally? Because I know some funds are pretty secretive about their terms, or does the contract get uploaded to them? How does that work?
You can run it locally. So they do have some clients who you'd be surprised at their clients because of their secrecy. We mentioned them earlier on the call, but there's definitely like they're not they're working on that SOC 2 compliance and all that, but besides that they're very secure, can run locally. You're not getting your data's not getting leaked anywhere. And I just like it works. I mean, apparently there's other providers in the space, but they launched out of a deep focus on hedge funds. So the first contracts that they trained on were hedge fund agreements. Now they're doing like exchange agreements, and they're working on real estate contracts. Like, if you own a strip mall, this could be good for you, right? Something like that. But they really focus on hedge funds first. So they understand like that data lexicon very well. When there's all these nuances about auto renews and cancellations and upgrades and ticks up in contracts that the system just gets better at. And then of course like those contracts can stay within your walls, call it a private cloud if they have to.
That's really cool. Okay. What else? What else is going on outside of work? We haven't caught up in a while. How's life otherwise?
Yeah, I mean, life outside of work, I've become a big DIYer, I would say, over the last 4 or 5 years. For me, it's a passion because it gets me away from the computer. It's just it gets you away from a screen. And ironically, I might get back to a screen with something else that I'm working on. But I love fixing things, electrical work, plumbing. I've been working a lot to fix the deck. Been on the roof a couple times, which is, I'm not afraid of heights. I realized I wasn't afraid of heights once you get up there, but it could be dicey work, but I love it. It just gets me. And we started to pay for people to help for certain things that just take too long, but I love fixing stuff. It's become a real passion of mine. We joke with my neighbor. He's exactly like me. We actually have the same. His name's also Chris. We have the same initials, so it's just like a funny joke. But we want to start a YouTube channel, one of these like, you know, 3-minute repair type of videos. There's a million people who do this, so who knows if it will go anywhere. But it's like it's a side passion. And now he's got a 6-month-old. I have a 16-month-old. So kids like derail the side projects, right?
Well,
But welcome distractions, but it's put those things on hold.
I thought you were going somewhere else with this, where you can have a YouTube channel where your son just destroys the house and you go back and like patch it up.
That's not a bad idea. I mean, he can work like a little electric screwdriver. He can push the trigger of it now and stuff.
Yeah, it's like these are the things that kids will mess up in your house you didn't even know could get messed up, and now I have to figure out how to fix it. So it's can bring them into your YouTube channel. That'd be cool.
Yeah, yeah, but I'll give you 10% of the royalties for the idea. How's that sound?
This sounds great. I'll watch it. Sign me up.
Cool, cool. Yeah, no, that's about it. I mean, work's been great. It's been quite a journey. We're hiring. Like I said, we had an analyst who left us in July. So we're hiring more in the data world, but it's tricky to find people who are, do I train people out of school? Do I hire more seasoned people at more seasoned people prices, right? So it's been a good journey to figure out how to scale this. not like raising money and hockey sticking anything anytime soon. I think we've had a great growth, and it's small. It's small, but it works great. And like we said before, it's more money than I ever would have touched at any of these firms. So, um,
Well,
knock on wood.
how if people want to get in touch with you to learn about either your services or to apply for a job, what's a good way for people to do that?
LinkedIn or the website or my email, cp at cpcapital-llc.com. It wouldn't have a dash LLC there. CP Capital was taken, or else I would have picked that one. But it's got the weird dash in there that throws people for a loop sometimes. But that's I'm active on LinkedIn. I'm always very responsive. Um, Always happy to have the chats. I get people want to pick my brain a lot. I'm happy to do that a couple of times. Some people want to have more serious discussions. Some people want to have less serious discussions. I think the more you talk to people, the more you learn. And I've had conversations where I was dreading it. Oh man, this guy, and then he has nothing to do, and then it becomes a client, or it become I hire this person, or I open a door for him, or he opens a door for me. So I love talking to people. It's part of the business, and I welcome it. You have to. You have to be if you want to be successful in this role. You need to be social. You need to understand the markets. I think that's an edge that we have over like other type of people who are just in sourcing or just in procurement, where they're not really sure. Like when I was at WorldQuant in the beginning, I wasn't really sure what I was buying, but I learned and I had a passion for it. And now I have like a more deep understanding in the types of data and why people care about certain things. And I trade personally myself. So this is all like I don't really use the data that I'm like contracting for. I can. It's not mine. I'm just in the middle of these. But it just keeps your eyes open into what's out there, which I really enjoy. I guess that's another side passion is just trading on my own.
I mean, it totally makes sense to your point about like if you really care about something, if you're passionate about something, you're going to be coming at it from different angles, and over time, that compounds. You build this amazing experience that then is super valuable for someone else who's clients that don't have that kind of expertise themselves. So, Chris, it's been awesome talking to you. It's always good to see you and hang out. And thank you so much for being here.
Likewise, Matei, really appreciate the opportunity. Thanks again.